Hello, it's Raymond here from BMS Accountants. And if you're the landlord of a rented property, well then this video is going to be perfect for you. It's coming to that time of the year again when landlords will need to have their accounts prepared and submit these accounts to revenue to be assessed for any tax liability. My clients would have two regular and common questions. Firstly, do they need to submit a Form 11 on an annual basis? And secondly, what expenses can they offset against profits to reduce their tax liability? To answer the first question, if the profits from your rental income are greater than €5,000 per year, then yes, you need to submit a Form 11 on an annual basis. If the profits from your rental income are less than €5,000 per year, then no, you do not need to submit a Form 11, but rather you submit the accounts for assessment through the RUS My Account. So what expenses can we offset against profits? The list is quite varied. For example, you can offset certain pre-letting expenses in getting your property ready for renting out. Any expenses that you incur in maintaining your property, such as cleaning, painting and decorating, repairs that might need to be carried out, these too can be offset against profits, as can any management fees. Advertising costs and professional fees, such as your accountant's fees or legal fees and drawing up contracts, can be offset. Property and public liability insurance can be offset. Ground rents and rates paid to a local authority are also allowable as an expense. Mortgage interest relief, and as of the 1st of January 2019, 100% interest relief is allowable. But note, to qualify for mortgage interest relief, you must be registered with the Residential Tenancy Board. You can claim the cost of registering with the Residential Tenancy Board as a business expense as well. If your tenant vacates the property and leaves you with unpaid bills, such as electricity, telephone, service charge, you can offset these against future income from your property when you settle the liability. There are also expenses called capital allowances. And this is where revenue will allow you to write off the purchase of certain goods at 12.5% per annum over 8 years. These are generally major purchases that you will make for your property, such as furniture and white goods, such as washing machines and dishwashers, the cost of which cannot be written off in the year of purchase, but rather over 8 years. Remember, you do need to keep full and accurate records of all expenses for each property you rent out. There are certain expenses that are not allowed, which one might think should be. For example, the local property tax. This is an expense that you, the owner of the property, will have to pay, but unfortunately, it's not allowable as a business expense. You cannot claim capital expenses on property improvements unless it's allowed under an incentive scheme. You cannot charge for your time in maintaining the property. So for example, if you're painting the property yourself, the materials are allowable as a business expense, but you cannot charge the cost of your own labor when carrying out the painting and decorating. I hope this video has been of some help to you. Visit our website, www.bmsaccountants.ie, and go to the business support section, where you'll find not only this video, but a lot more detail on what is allowable and not allowable as a business expense for your rental property. Take care. Thank you very much.